The markets continue to trade indecisively. Yesterday, when we had the big breakout, it came right back into this little sideways trading range. Today, we did a doji, telling us there's still indecision in the Dow. Stochastics slowly coming up, which is a good indication that there's not anything right now that's showing any uh, great weakness in the markets. Also showing there's not any great strength, but no weakness yet. The NASDAQ also showed no great resiliency to the downside or the upside. It looks like the markets are moving sideways, kind of waiting for the 50-day moving average to catch up. Even though the market's not moving with any great strength one way or the other, the candlestick investor has the advantage of identifying which stocks and sectors are acting the strongest and how to use them based upon candlestick signals. For example, our recommendation on cool is based upon the consistency of moving up after a big fry pan bottom breakout. And as you can see, moving the charts back a little bit, there's a big fry pan bottom, and then it started breaking out. And we can maintain our position in this stock as long as it didn't close below the T line. However, notice a simple analysis that we can use for candlestick analysis, that if we use the T line as a support level, with the caveat that the further away we move from the T line, the higher the probability it's going to come back and test it. So the Japanese rice traders give us very simple visual analysis of what happens in human nature, which is, where do most people buy? They buy exuberantly at the top. If we start seeing a situation, number one, where they're starting to move away from the T line, two, they're gapping up in an overbought condition, those are signs to be ready to take profits. So the question is very simple. How do we know to take profits up here if we don't have anything that's telling us that we've got a sell signal? And that becomes a simple logic in the fact that if we're that far away from the T line, the probabilities are against us. Could it go higher? Yes. Is there something wonderful happening? It could. How do we know when to take profits up here? The basis of candlestick analysis is that we know that it works, or it wouldn't be around for 400 years. So to add additional confirmation as to is this being a good buy situation, supporting at the T line, you can throw anything else on your charts that would add additional confirmation that this was a support level. If you throw the Fibonacci numbers on here, you can see that this was a 38% retracement level. So that was a good time to buy. So what again was the best time to sell over here? We have a very simple trading strategy. If you can see that you've moved too far away from the T line on your daily chart, flip to your 10-minute chart. Once we get way up here, and again on the daily chart shows us a way away from the T line, we get ready to take profits as it starts closing back below the T line. We can always buy back and get back out if we're up here in a range where we're starting to see selling back below the T line. This allows for taking profits up in this area versus waiting for it to give back a good percentage of the trading profits. So candlestick analysis has simple techniques for taking profits at the appropriate time and buying back in at the appropriate time. That'll be it. We'll see you in the chat rooms.